Ton, 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 ton. Hello, traders, and welcome to the NFP webinar. My name is Richard, and I will be your host for this session. Today, we're gonna try to be Jedi's. Yeah. Thank you very much for the marketing team, for Mrs. Sophia Liadis for hooking up together like this idea with Star Wars International Day, right? Today is May 4th, and May the 4th be with us, right? So let's see. Now, I hope you guys can see my screen and also hear me well. Can you please confirm um, in the question section? Let's say, can you put a yes if you can hear me, please, and also if you can see the screen, that would be great. Thank you. Excellent. Thank you. Um, I'd like more confirmations, please. All right. Great, great. Thank you. Thanks a lot, guys. Okay, so without further ado, let's jump straight into it. Okay, let's pull out the lightsabers and let's smash it right now. Let's see. For instance, I'm gonna go on the dollar index on the daily chart. Now today, it's all about the U.S. dollar, right? So the way I'm looking at things is basically, obviously, we have a downtrend right here on the dollar index, right? Which has been going on since December 2016, right? So with the start of 2017, dollar started rumbling down. Yeah, had a journey. Now, what we can actually see right here is an attempt for a corrective structure, and this rally um, is a bit too strong, in my personal opinion, to for this to be considered as a I don't know, as a temporary correction, right? So it's a higher degree correction, in other words. Now, before we get into it, and before I actually share with you guys my thoughts and what I'm planning to, well, what I'm thinking here, I'd like to um, actually tell you that everything that I'm about to do or show you is not designed to induce or influence you in any way, and all my views are to be treated as simple market commentary. This is not an investment advice. It's just my personal opinion. You're all grown men and women, so you can make your own intelligent decisions. You don't need to follow anybody. Now, what I'm going to do today, my specialty. Now, with that out of the way, obviously, I'm going to continue and jump, right? So, yeah, my specialty is Elliott waves. I'm using Elliott waves and I'm combining them with multiple things such as Fibonacci extensions, retracements, points of interest, vibration levels, divergences, multiple things such as channeling, let's say, and corrective structures. But anyhow, multiple things. It works with everything. It's not Elliott waves is the Elliott wave theory is not so easy to apply. However, it gives you an edge, and this is precisely what I'm going to explain to you today, what I'm actually seeing. So we have about 25 minutes. So I'm just gonna explain to you right here. I have in front of me the charts and go slowly on each pair. Let's say I'm going to take a look with you guys on gold, silver, euro USD, pound US dollar, dollar yen, dollar Swiss, a bit of crude oil, the West Essex Intermediate, maybe a few indices, one European and one US, let's say, for instance, DAX and the S&P 500. But it's all about the dollar today, right? So the dollar is gonna obviously have a move, a sharp move, a big move is expected today. Okay, and due to the position, the overall position of the market, this swing could be decisive in a sense that it could either break out for the upside and the dollar could be very bullish, or um, the downside could be confirmed. Okay. So what I'm going to do is I'm going to explain to you how I'm seeing things right now. I mean, the current wave count and everything. So the current wave count suggests that this being the primary A turquoise was a leading diagonal, then a double free in the corrective B, and then an extension in the C wave, which is this one, right? So the extension with intermediates red 1, 2, extension the third wave, then corrective 4, and then 1, 2, 3, and there we go, we are correcting. The only issue that I'm having right here is that this correction, according to time cycles, is a bit too big to be a fourth wave, not to mention that it's overlapping with the first wave and it's invalidating one of the main rules of Elliott Wave trading. By the way, if anyone does not really understand the underneaths and rules and guidelines of Elliott waves, not to worry, I got you covered. Just developed a full video course, video presentation with rules guidelines, which is obviously available for Orbex traders. So be sure to, I mean, if you want to get your hands on that, be sure to go on live chat and just ask for it. This will be uploaded very, very soon, but those who want it can just ask for it now. In the future, I'm also going to present some educational webinars based on this theory and also some advanced sessions. So yeah, now let's continue here. Now, what I'm seeing here, right, is this rally, which is pretty strong, I would say. So I'm gonna zoom into this entire piece, right, and this entire correction. This is exactly what we're gonna analyze today, and obviously, I'm going to attempt to predict this this event as well. Now, obviously, you're all traders, so you know exactly what the NFP is, non-farm payrolls, the jobs report in the government sector for the United States. It's important. That's why the NFP is one of the most anticipated events of the month. Happens every month, first Friday of every month. So it is quite important. Data is important. Jobs are important for the economy. If people are employed, then of course more more money is being spent, the economy is being sustained, etc. Right? So jobs are good if they're added. Not to mention the wages, yeah. Which, in my personal opinion, the wages could be a bit more important, right? Today, I'm going to explain to you why. Because there's a lot of focus actually on the on the wages and the unemployment rate. So let me just, okay, what I'm going to do is I'm going to go on the economic calendar. Okay, let me just take it. All right, good. Now what I'm having here in front of me is the 2-hour chart, right? So I zoomed in. Now this corrective piece, that corrective piece that I just mentioned earlier, is actually, let's say for instance, it's having multiple structures inside it. So, which indicates that this could be a complex structure. Yeah, with an ABC with this W purple, an X with a false breakout right here, and followed by a free wave move, right? So, in order for this to be considered as a B wave, we would need some structure like this. We don't have that. We have it halfway. This is the X wave and the temporary interruption that usually has, right? So far we have one structure in this W minute scale pink, right? So we have this structure, yeah, in an expanded flat, X going below the start of W and Y going above the end of W. So we have one structure there and another structure right here with a triangle inside it confirming this B. So we have an a B, and a C. Another structure right here. So far we have two structures, right? In a sense that we have WX and then WX, or A, B. By the looks of it, this could be a C wave, right? The C wave, which is basically, in my personal opinion, running out of steam because we have divergence. Yeah, in other words, divergence is occurring right here. It is a conflict basically between the buy and sell sides. So we can actually see the price action went up while the the oscillators volumes right here are decreasing, which means that bulls, they push the market higher, but they're not really sustaining this move with enough liquidity, leaving room for the bears to spot this and possibly take action and gain control. Okay, now before I zoom in even more, I'd like to, let's say, for instance, with the Fibonacci extensions from W and X, we can have basically, we surpassed 100%, that's for sure, because of this extension. But the next stage will be the golden ratio, which is 150, 161.8, right? So 161.8 is the focus right there. Now, from this extension, W and X, the highest point and low point, we have 161.8, surpassed it, right? This is a serious extension right here in the C wave and this wave. So we went to 200%. We can see a reaction there. Price is consolidating, which means that this could be dying out, the move on the upside. Hence the reason why these fibs are actually aligning right there. So let me just arrange the chart a little bit. All right, now this is what we're going to work on. Yeah, and as we can see, I have this extension labeled like this 1 2, and then the extension within the extension. So extension in 3 4 5, we have basically the third wave, correction 4, and then it goes extension in the the rally happening in the fifth wave, possibly causing a spin-off top, right, with a pinch of divergence right here. So we can actually see that this thing is channeling right here. Yeah. So what I'm curious to see today on the NFP, right? What I'm curious to see today is basically, according to this data, let's say my 2 cents, and again, this is my personal opinion, guys. I don't want you to make any decisions according to what I'm saying here. I could be right, I could be wrong. You have to acknowledge that. So what I'm seeing here is a possible breakout, first of all, of this channel. That's one thing. Another thing is, should the price action go even higher, then definitely we're going to have divergence, right? I mean, we already have the price action is already diverging. So this can basically work both sides. It can either start dropping or cause divergence, because you see this top has actually gone in this area. Yeah, it went inside it. Didn't touch the 100%. I would like to see 100%, 161.8% reached and aligning with the 227.20. Yeah, on this extension. So 2 fibs aligning right there for the divergence at the end of the C wave, at the end of the structure, the complex WXY pink, but also possibly completing a bigger degree correction. So if the job report is favorable for the dollar today, I wouldn't mind seeing it rising, but I would see, personally speaking, again, I would see this as a limited, possible limited move. Okay, hence because of this wave count, because of this rally, could be dying out right here. And I'm gonna now go to the other pairs, right? We have about 15 minutes left, and I'm gonna make it very, very quick. Yeah, how I'm labeling gold on the daily time frame is like this. We have a move up, yeah, and then during President Trump's election, we had the gold dropping, right? But this is a very complex structure. This is a conflict of corrections on degrees, because this correction is correcting this move. This move is the first move, so we would expect one more, right? But the problem, the question is, when is it going to come? When would it be expected according to these structures? So how I'm seeing things is this being one leg, yeah, this being the correction in the middle, right, to finalize about somewhere around there, causing the other move, completing this, and then from here to go. This is how I'm labeling the gold chart, the gold on a daily chart so far. And one more thing I want to show you, this correction, how it behaved. Notice that I have these trend lines of the degrees. Tested one time, tested second time, third time, fourth time, it broke, went to the next one. Tested, went to the third one. Tested, broke out. Right? Now, we can see what happened every time it touched it, yeah? But mostly when it broke out, yeah? We can actually see. So I'm thinking that 1295 could be in focus. Somewhere around there, 1295, 1285 even, I wouldn't mind. But we'll basically see that more. So let's zoom in on gold, yeah? Now the move on the downside, I'm labeling it as a 1-2 after this correction completed right there, yeah, and basically things to be extended on the bearish side. 1, 2, 3, 4, and this completing the 3, and this is what I want to see right now, because this 4 can be actually here, and gold already completed the correction. The problem is that I didn't hit my fibs. Yeah, so we could have a good NFP according to this. Yeah, the dollar could go up, and then basically causing gold to do that last drop for this, and then possibly completing the entire intermediate degree correction for the B wave. Moving on to silver. Silver looks like it's one step, could be one step ahead of gold. Looking at like a 1, and then this to be the second wave correction, and then this to shoot out. Looks like it's looks a bit dangerous right here. So I'm just gonna stay put with silver, because silver is quite demanding, I would say, and it's pretty tricky sometimes. Euro USD daily chart. I'm labeling this as an intermediate degree correction on the larger scale. So right here, this fourth wave, according to this wave count, could be completing. As you can see, it's I'm labeling it as a WXY, complex double free correction. Yeah, with, where is it? Okay, WXY. Let's put it here. Okay, for this intermediate green 4, unfolding in a descending channel. Sorry for the, okay, so we have WXY, and this is practically almost hitting the 38.2 of this entire parabolic extension in the third wave on Euro USD. So it's pretty, this NFP, I would say it will be very, very important. That's for sure. Okay, so let's just prepare the economic calendar right here. Okay, and this is what we're gonna take a look at today. All right, we have about 10 minutes left, so let me make it quick. On the Euro US dollar, how I'm labeling this drop is as an A wave, B wave, and then 1, 2, 3, 4, and this possibly completing in a ending diagonal. So the bullish side looks quite promising. Not saying that it's not supposed to go down or something. I'm saying that this fibs could be very important. So if this breaks out of this ending diagonal, which is pretty normal, it can really shoot off. So we'll see what happens. Now, as for the pound dollar, kind of the same structure right here. Ending diagonal in this fifth wave, we'll see what it delivers. USD yen. Yen is looking like it's leading things. So this correction could be finalized already, hitting the 61.8 of the entire drop. So reversing immediately, we see a corrective piece right there. I mean the reaction, yeah. So it's kind of dropping now. USD Swiss, practically according to this extension, this could be done. We do have a potential triangle right here, so this can allow it to move a little bit higher all of a sudden, right? But a triangle is actually being formed in the, let's say, fourth last piece of the entire pattern, so it could be treated like a move and then immediately reversing. We'll see basically what happens, because this could be ending. So we'll see about that. Crude oil, seeing one more move on the upside, because this I'm seeing it as a first leg down, and then this correction in a double free as well, WX with a triangle next, and then AB, and then this move on the upside, this C wave could be an ending diagonal, so I'm still gonna monitor it. DAX, this is the daily chart. Gonna after the move on the NFP, we'll see basically what happens. But let's say, for instance, how I'm labeling it is as a WX and then A, B, C. Right? We'll see if the C wave occurs, and then to possibly complete the cycle and move to the next grounds. Right? On the smaller time frame, DAX is looking like could basically deliver one more bull move, or according to this, if this is a triangle indeed, we'll see. It's not completed yet. S&P 500, this is a bearish view, bearish wave count, which would imply S&P 500 to reach the former fourth wave, which is basically 2,440. But other Elliotticians are labeling S&P 500 in a triangle. So we'll see. Now, the only, obviously, a breakout of this triangle on the downside is very bearish. A move on the upside would basically agree with the triangle, and basically this to shoot towards the next grounds, right? So practically we'll see what happens. Now we have a few more minutes left. Now what we're gonna do is just gonna stay on the charts. Now just a quick question: which asset, which symbol, can you please, if you will be so kind, just write it in the chat box. Which symbol should I focus on? What are you guys um, mostly interested to see today? Obviously, according to what I have, not anything that I don't have here. So it's gonna be euro dollar, pound dollar, gold. What's on your mind, guys? Just drop me a text here. Okay, we have a euro USD. Anything? Anybody else? Gold. Very well. Excellent. DAX. Okay. USD Swiss. All right. We have time, guys. We're gonna stay half an hour more after the move itself. All right. So that's to be honest with you, that's when the analysis will really start, because what we want is the move itself. That's what we want, so we can actually confirm our possibilities and see exactly what what are we doing here, right? That's for sure. Now, again, on the dollar index, back to 2-hour chart here on the dollar index. Now, what's on my mind? Yeah, my 2 cents here. If we have a bull move, okay, the divergence, and then to possibly, start unfolding on the downside, because this extension could be done, even if it goes halfway to these points of interest. By the way, these points of interest work for me nicely. I'm going to explain to you how I'm using these things, and but we don't have enough time. We have about I don't know, 4 minutes, something like that. Let me just see to it. All right. Yeah. So we have about 4 minutes left, guys. Okay. and we're gonna see the results. Now, again, this channel, yeah, I mean, let me just extend this a little bit. All right, there we go. What we can see is a possible move here on the downside, and this could be getting a hammer right here. So this is what I want to see. That's why I'm not in a hurry to make decisions here. I mean, this is the real thing, right? It's live. So I'm doing exactly what you guys are doing, what we're all doing. We're in front of the charts and we want to make an intelligent decision. So the decision is best to be taken. I mean, I don't know. It depends on how you guys are looking at things, how you guys are um, taking your decisions. Aggressive, conservative, moderate, etc. Aggressive traders will obviously speculate, right? And basically decide. Now, if we were to speculate, let's say for instance, the average hourly earnings are expected to drop, which is bearish, I would say. Then the payrolls are expected to be obviously higher, right? So the where's the unemployment rate? No, not this one. Okay, this is a non-farm payrolls. Unemployment rate. Okay, sorry guys. This to drop, so it's a bit bullish, and then we have expectations for a non-farm payroll to be higher. Now, if you were to ask me, these this data looks, points out towards a possible mixed outcome, which would be in favor for a some wild swings and then a possible bearish outcome. So if I were to give my 2 cents, I would say this thing can drop. I mean, the chances for this thing to drop, in my view, and this is, again is my personal opinion, could be, could turn out to be true. This bearish view. However, just like any, analysts or traders that they want to confirm their analysis, we need to see this move. So we're going to see it right now. All right. All right. So we have a drop in the unemployment rate, less jobs added for the non-farm payrolls. Participation rate is lower, yeah, and the average hourly earnings, the star of the day, 0.1, right? So the focus is indeed on average hourly earnings, guys, I'm telling you. Now, obviously, right now, what's happening is the market is digesting these results, yeah. So aggressive traders obviously would look at this as a bad outcome for the US dollar, correct? I mean, let's take a look at it again. Less jobs being added, of course, even compared to 200K, 280K or whatever, they were before, this is way too low, okay? Not to mention that the previous ones were 135K when it really disappointed. Now, the participation rate, 62.8%, again, not meeting the expectations. And the average hourly earnings, 0.1. So the only thing that actually that was good was the unemployment rate, okay? And the, let's say, again, disappointment right here on the private non-farm payrolls. So, in other words, guys, the dollar could be in trouble. Now we don't see the spike, we don't see any actual move, right? So in other words, the big boys are preparing right now. So we'll basically see. Now what I want to do is draw a channel right here, yeah? And the real confirmation, let's say for instance, should this thing start dropping, the real confirmation would come from this scenario right here, flag, and then really go for this points of interest that I have there. These levels are placed based on previous retracements, previous points of interest, fibs, etc. Right? So yeah, but we have no movement so far. Okay, let's take a look at the others. Now let me go drop. Sorry, go on gold there. Yeah. So gold is not doing much, right? So we'll basically see. I mean, this is Friday. It's actually called Crazy Friday, right? Um, so this move, I mean, the market is not really moving. To be honest with you, I was clearly expecting a bigger move on the charts. Seems like it's possibly waiting for some other more important event or one of Trump's tweets or something like that. Sorry guys, I'm kidding. All right, now Euro USD again, not really reacting, but according to the news, if a breakout of this trend line would occur and then basically giving a bull flag, a bull setup, this can shoot right. Now the other scenario would be for this to basically bounce around this ending diagonal. I mean, if it's destined to complete this ending diagonal right here. But a breakout would be nice to see. Pound dollar, same thing. Exactly the same thing. Almost, but anyhow, it's really unfolding like that. Yen dropping like a rock because obviously it was it started. I actually mentioned that it's leading things right now. Curious to see about the USD Swiss not moving. All right. So in other words, this could be a move on the yen and then a correction to occur, a bigger degree correction, which would basically would translate in that in that last move on the upside, in my personal opinion, and then to start unfolding. But the thing is that fibs are already met. Yeah, fibs are met. I mean, from this swing with a false breakout towards there, the extension is, in my opinion, to be considered as complete. Yeah, not to mention that these structures with this running flat right here and then ending diagonal, temporary interruption, and then again AB and then the extension. This wave count pretty much seems complete to me. Okay, so we'll basically see what happens. I'm saying this because somebody was asking for the USD Swiss to be in focus. Let's take a look at tax. Curious to see if this thing will break out. Yeah. So far, we have more bearish dots for the dollar than we have bullish dots. Not sure if we're gonna have a very big move. Yeah. Right now during this webinar, but it might be. I mean, we could be waiting for some other events. I mean, not sure if today, but clearly a move would actually occur, a decisive move. All right, and the dollar is quite reacting right now. I'm on the 2-hour chart. Now, let's say, all right, now during this, I mean, a bit earlier, I actually took 2 trades on the gold and on gold and on the euro. So what I'm going to do right now is do the smart thing and just put it to break even right there. All right, and this one as well. Okay, so just in case the dollar decides to be naughty and cause that last move. Okay, now again, what I'm just gonna delete this because I know I don't need it really. So for now, what I'm gonna do is I'm gonna say that the dollar could have completed this cycle, yeah, because of the results. So I'm pretty comfortable at this time with this wave count, And in other words, I would be inclining towards this scenario. So I'm just going to leave these things like this, all right? Because possible breakout right here, a move beyond this point would possibly confirm the downside, right? So we'll pretty much see what's going to happen. So let's just leave it running, okay? Let me just continue on a few things right here and get you basically up to date with my with the work I did so far, yeah. So you can actually see how I'm seeing things. Now on December 12th, on the FOMC Federal Reserve December rate high, when they actually started raising the rates, yeah, bearish outcome occurred, and I was able to spot this with this setup, yeah, for the downside. Now following up on that, on the actual bottom, there's a setup. This was a video. This was a setup right here, yeah, saying that the bullish correction could begin, and then it went up and then went down. This move down, I'm considering it as a false breakout, because it has mostly free legs inside it. Again, right here, prepared for the bearish side. Still didn't give a 5-wave sequence and basically give a nice downtrend. Yeah, would have loved to see that, but it didn't. Again, here on the correction terminating right here, said that it's probably gonna go up and then to continue. Still, it didn't want to drop like a rock. What I wanted to see, right? So it started moving around and making a mess, and the correction became complex. So what I'm obviously I did a few let's say video, and again another video, and set up again on the FOMC, saying that the outcome could be bearish. Yeah, it was bearish. Now right here, when it started, when I noticed that the correction could be complete, I pointed out towards the possible bullish outcome, right? A, B, and then the C wave, right? And we know what the C wave looks like, right? Now, after that rise, again on the NFP, on the 1 month ago, in the previous non-farm payroll, I said we could have an X, so down and then up. That's what happened. Now, somewhere around here, yep, made a post for the C leg or the extension, and again it occurred. Yeah, it's really, I was expecting this a decent C leg, but not this monster, right? So, but anyway, it's okay. The analysis was okay. What I want to see right now is a divergence. I would love to see a divergence right here. So I'm not saying that I don't want the dollar to go up. I'm saying that it would be better for my analysis to align on these fibs with this divergence. That's to me, that would be a better setup. And also, for, let's say, for instance, for gold, yeah, from this entire swing, WX, and then this thing dropping, right? The 100% is, let's say, almost touched, yeah, and the extension WX towards the Y. 50% is already reached off the leg of the A leg. Would like to see 61.8. I'm gonna tell you why, right? Because this broke out. It's on the second trend line. What I would like to see is this. So 1295, and then, right? Now this is possibly aligning with this view right here. Okay. Now this can develop also as an ending diagonal towards here, channeling and then possibly shooting off. Don't really have on gold what I want, that divergence at the end of which is basically, ending diagonal with a divergence at the termination of a structure. For me, it's like a unicorn, guys. So I would consider that as a good setup. Now euro, let me go back on euro on the 2-hour chart. Nothing much to do today, guys. No move. Absolutely. I mean, overall, there's no real move. That's why I placed these two trades in at break even. Yeah, which one of them has already been stopped because of the move. Yeah, let's see if gold survived. Yes, gold survived. So I'm in one trade right here. So I'm just gonna stay put. Now my risk right now is 0. So I'm just gonna leave it like that. But to be honest with you, what I'm interested to see on gold is this. Never mind. I basically wanted, I mean, my desire was for this 100% to be reached today for the US dollar so I can get it out of the way and focus on the future, right? But it seems like it doesn't really want to give it today. So the market could be, I mean, this structure could be awaiting still. So the 100%, 200% right here of 1, 2, I mean, we already have 161.8. So this fits nicely, I would say, as a third wave extension, 161.8 of 1 and 2. Yeah. Now for the fifth leg, I would basically do this. Yeah. And let me just load the fibs. Yeah, which is 61.8, which is 1285. So it would fit a bit nicely. Yeah. Now this move can go a little bit higher. So if I were to align the fourth wave right here, I mean this went here, yeah, we would have basically this type of structure going inside the price action territory of a previous 4. So this wave 4 to go inside this 4, yeah, meeting an important rule of Elliott waves. Okay, not to mention another measurement of the fibs reaching 38.2 default measurement for a wave 4. So at this stage, I don't want to draw any false conclusions. Sometimes, you know, Elliott waves is a precious tool. Yeah, it's good to use. You have to know how to use it. Be patient with me, bear with me. I'm gonna start these educational sessions, and I'm going to spend much more time explaining things and how the structures look, how I'm looking at things, why they look like this, explain everything, all the structures, and you know, so they're gonna come. Okay, for now we're just getting to know one another. This is my first webinar on behalf of Orbex here. So keep it steady, guys. I'm gonna be here for you. Don't worry about it. Now, you can also, let's say, for instance, take a look at my articles on the Orbex blog. Do some videos from time to time, right? Let's say, yeah, there's some good analysis right here, and I'm gonna show you a couple of setups. Let's say, for instance, we went on. Let's say what I've shown you before is on the dollar index and how I you know how I was viewing the structures and everything. Now during that, of course, there was analysis available for, let's say, gold right here. Yeah, March 27 from here to start basically unfolding on the downside, right? Then on the reversal, I was present with a bullish view, okay, with this one small one right here to basically on the counter. Now after that, obviously with another setup, bearish setup, which basically dropped, yeah, hitting my pivot 1304 right here nicely. Gold, would be honest, kind of tricked me right here with this move on the upside, because I was expecting this structure to be the structure, but silver, sorry, this is silver. Silver decided to surprise. So this one was the only one that caught me off guard. Now again, let's say for instance on the Euro USD, there was a setup available on that as well. As you can see, dropped, then rose. Okay, and we all know that it started dropping again after that. Now on the actual reversal, again, obviously I was prepared right here, okay, for this rise, but then again I was also feeding you guys with this setup again for the bearish side, right? And notice how 1.24140 nailed it. Yeah. Pound, to be honest with you, I was more bearish than bullish. Yeah, because of the structure. I see it as a corrective, but it was a nice setup, meeting all the expectations. And we can actually see what's happening right now. Okay, dollar could be rising. So, yeah, I mean, well, we need. I mean, I need to wait, just like any other trader, right? Also, let's say, for instance, should be a setup right here on the USD yen. Yeah, on this bullish move. Okay, for the upside. And right now, I also posted a bearish view on USD yen, which is basically unfolding as we speak. Swiss, somewhere around here. Yep, on the C wave, on the extension, right there. Can't even see it. Okay, right there. So yeah, it's a big move. Okay. Somebody asked for DAX. Well, DAX is one of my favorites. Let's say, for instance, let me give you guys an example. This is a 2-hour chart and it's a full cycle. I know how it looks. It's a mess, but it's not actually, because for me it makes perfect sense. Everything's aligned right here. So whoever wants to talk about DAX, drop me a line. Now, with this view, May 12, 2017, let's say, for instance, that 12,950, calling for 12,000, then 13,400, then drop, yeah? So down, up, down. And there we go, daily chart, yeah? 12,950, 12,000, 13,400, and then drop. Now, of course, the drop happened. After the drop happened from 12,000, I posted again. Notice the wave count has been updated. And it went on the upside, then down again, right? So we went on the upside, then down again. So I'm gonna zoom in, and basically, I mean, the big structure, you can actually see it. WX, A, B, I'm expecting this, yeah? So let me just see. Now this rally, again, with the dollar reviews and everything, I've managed to post a nice setup right here, yeah? And going towards 12,850. What's next? Well, we'll see, because I've posted a bearish view, yeah, and we'll see what happens. SPX 500. Well, to be honest with you, this one was posted somewhere a while back, so you can actually see, guys, that even though it takes a long, I mean, Elliott Wave analysis, and it implies structures recognition and patterns, etc. But it's worth it, right? I mean, when the S&P 500 started dropping on the second attempt of a fall, 2,800 was actually seen. And those of you who know this charting station know that when I click a button, it's not a joke. It is the real thing. It's actually putting the loading the new bars from the time of that post. Yeah. So no reaction on anything so far. Market is practically frozen. Nothing much to do, but I've just shown you a couple of things, and I'm I hope that you understand and appreciate this. I mean, you agree basically with my views, yeah? If you do, I'm here. You can always drop me a line, right? But pretty much that's it. Now, I will be glad to take some questions. So without further ado, just write me those questions, and I will do my best to answer them. Okay. Okay, just give me a second, guys. Okay, Richard, thank you so much for explaining this NFP move. Thank you. Nice to see you again, Gerhard. Okay, let's talk about day. I think you meant DAX and Nikkei. Okay, all the indices, guys. Let me let me just share with you my my views on the indices. Yeah. Now I'm not gonna load a Nikkei chart or something like that. Yeah. But they're all, in my personal opinion, they're all pointing in the same possible direction. Okay. Now, many people are calling for a market crash, I would say. Yeah, I don't think so. Not yet. The cycles are not really pointing me there. Yeah, and I'm going to explain to you what I'm seeing right here. Now, this would be a wave on the S&P 500. This would be a wave 3 of a super cycle degree. Oh, no, sorry, cycle degree, and then this wave 4. Yeah, of a cycle degree. So this is basically 2016. Yeah, so 2015, 2016, then again. So this is one structure. This is a big correction. Okay, this is what I'm expecting right here. Yeah, so is it going to be a triangle? Is it going to be a proper structure or a complex one? We will see. For now, I can't tell because I'm in the middle. I could tell when I was here. I also knew about this drop. I mean, I knew it was possibly coming, right? And I have a video on this during the Elliott Wave presentation course, so it's there. Now, the way I'm seeing things, and just for me to make it quick, right? I'm seeing things like this. We have a wave 1 primary, then 2 extension in 3, yeah, super extended 3 with a overshoot right here, parabolic move. So we're not even, I mean, from that move, from this fibs, yeah, this one's right here. From this fibs right there, we hit 38.2, yeah. Is this enough? Well, technically, for a wave 4 to be complete, 38.203 is enough. Is it going to drop a little bit more or not? That we will see. According to this trend line, doesn't look like it wants to drop, right? Unless it gives one more move and then form this. That would be great. Okay, so we will practically see with the next move. I will practically see and decide better on the US indices, but they're all pointing towards the same thing. After this correction, another possible parabolic move, I mean bullish move on the upside, but that's the trick. It ends. The wave count actually ends. Primary degree ends, ending a bigger degree. I mean a cycle degree. The cycle degree fifth wave is ending the super cycle, and so on. So not saying that the market crash is not around the corner. I'm saying something else. I'm saying that it could need more time. As for DAX, this structure on the DAX, yeah, this could be unfolding like this as well. So should a drop occur, I would be interested to see what happens here, because this is possible according to this wave count. So we'll practically need to wait. Elliott wave trading doesn't imply taking every swing. It implies intelligence, I would say, sometimes, but it also implies patience. And in other words, it's better to let the structures come to you, let the market unfold and reveal the structures. So let me move on to the next question. Okay, I have a few sell positions for gold since yesterday. Okay, well, if you ask me, this would have been your setup, yeah, for the sells. Anything in the middle, it's actually intraday, which is something that I'm not really fond of personally. But this is possible. I mean, you could be okay. However, I don't know. It all depends on the next swing for the dollar. Yeah. Just a quick tip, I would say. You would need to take a look at it, watch it for a few days. I mean, today, let's say, and Monday. So yeah. Should I close gold? Should I close or hold? Well, that's not for me to decide. I'm sorry, Mr. Molelli. I'm sorry about that, but I'm not giving advices. I'm only sharing my personal opinion and my own analysis. I'm not basically supposed to tell you what to do or what to do with your money. It's up to you. Now, I'm sorry for that, but it is the truth. Okay, next question. Not too sure what to do now. Also, I want to learn the Elliott Wave and master it like you. Okay, well, there is a course available. Yeah, be sure to ask for it. Go to orbex.com or live chat, etc. Ask for the course. It will be yours. The educational sessions during the upcoming webinars will be hosted by yours truly. So I'm gonna do my best to teach you guys a couple of secrets of mine on those educational webinars. Also, there's also gonna be advanced sessions, right? So straight to the point with advanced technical analysis. So this is for people who already know or who learned already from the courses, etc. Now there is a written course as well, an ebook. So if you like to read, that's typically, that's also available. Okay, next question. What do you think will next happen in pound Swiss? Well, interesting. And for this I'm gonna load the pound Swiss chart because this is this chart is quite interesting, yeah, because I've been posting some analysis on this on a bearish view. However, to be honest with you, this is channeling right here, and pretty much it looks like it wants to take off for one last leg on the upside. Yeah, so it's still a question mark. Now, firstly was, the analysis posted right there, but the way this is moving, it's not really so impulsive. It looks more has more corrective features. So to answer directly your question, I would say that the pound Swiss is showing more let's say at this current moment, more bullish signs than bearish signs. So it's up to you what's your what's the decision. But anyhow, just sharing my personal opinion here. I have a question here for Mr. Salman, but I'm not sure which asset you're referring to. Okay, if you guys have any more questions, drop them in, or if not, then we're gonna briefly end this session and be ready for the next one. Unfortunately, we don't have moves to analyze it properly, yeah, but I'm pretty sure that in the days to come we will we will practically see more details and more evidence, and I will be able to make a decision in regard, according to the structures present. Now, for those of you who want to follow me, let's say for instance, the Orbex blog is right here. Okay, I'm posting some analysis when the market allows me to, of course, when the setups are let's say good in my personal from my personal perspective. Not to say that they're always good. Some of them are good, some of them are not. It's only, this is what trading is, right? It's an analysis, so should be treated as market commentary. However, there are some good views right here. Now, I'm posting this analysis on the Orbex blog alongside multiple very experienced analysts, so you might as well check them out as well. Also going to be here present in the webinar section, but you can find me in the technical analysis section right here. Yeah, and on the Forex TV, where I post some videos. Yeah, so I keep people updated right here, as you can see with this. Use the bearish view right there and explain things, and also explaining the last bearish move on gold and etc. So it's yeah, we have some movements, right? The dollar is going up. Yeah, good thing I put that to break even, right? See what I'm doing here? So if it goes, it goes. If it doesn't, then I will have myself a better level below 1300, which is, to be honest with you, my level on gold will be the level in focus. That's only mine. I'm not saying that it was it's supposed to be yours as well. Everybody should make their own intelligent decisions. But 1295 is the level that which I could most likely focus on. So yeah, now as we can see, the dollar is pulling the rabbit out of the hat, right? So we had a market pause right here, and there it goes, right? What if I was actually, let's say for instance, selling right here? You see, that's the reason why I prefer not to engage in that very moment, because it's pretty tricky, guys. Trading the NFP is not easy. It implies a very aggressive approach. Yeah. So we will basically see what happens. Now, what I can do right here is say the following thing. This view remains intact, right? So I'm curious to see the reaction right here on this trend line. Is it gonna bump its head and unfold, or is it gonna provide a fifth leg and then bump its head? We'll see. We don't have all day, but we'll see. Right? So in the days to come, be sure that I will be present with some analysis, back you guys up, give you some feedback, and update the analysis constantly, either with videos or with written analysis. Let's see if I have some other questions. How this number affect Dow Jones? Well, take a look at the S&P. We're right there on it, and to be honest with you, how it would affect Dow Jones? Well, let's just go on the Dow Jones chart, right? I'm not honestly, Dow Jones could have a triangle right here. Okay, so normally it would affect it bearish, but I'm still trying to decide if this is indeed a triangle or a bigger correction within a correction within a larger degree correction. So still trying to work my way around that. I knew basically I had an idea that the drop is supposed to come. It did. I had an idea that it's gonna correct right here. I was bearish, but the point is that I was expecting this bearish move to go to 22,000. Yeah, that's the level that I'm actually focusing on. But this being a wave 4 within a larger bull market, this can be a triangle. So I'm not really gonna do anything or make any decisions right now on the Dow Jones unless it breaks this. Yeah, unless it breaks the trend line, the support trend line, then I would say that's very bearish. That's not a good sign. If it breaks on the upside, well, this could confirm that the triangle. This could confirm the triangle scenario, and I would say that there's possibly, I mean, more signs of bullishness than bearish. So yeah, I hope that answers your questions. I'm trying my best here to to answer your questions. Now let's move on. Sure, I'll check the education. Okay. I'm pretty sure that you'll enjoy it, and your feedback will be valuable if you don't mind. Thanks a mil for this webinar. You're very welcome. It's a pleasure. This full seminar is available as video. Yes, this session is being recorded and would be available as well. Do you have an Elliott Wave view on the Euro JPY? Yes, I do. Just contact me and I will give you my wave count on that if you want. Okay, let's move on to, let's go to the charts. Let's make a quick recap right here. Okay, so we bumped that head and nothing is happening. So anyhow, guys, we're taking a long time here. So briefly, I would actually say that I will say the same thing, right? Because nothing happened. So no move, but this could go further up, okay, and then have a divergence. That's my personal opinion right there. If not, I mean, a very bearish sign would be for this to start basically dropping. Yeah, I mean, as a breakout, mess, then continuation. So it's up to you guys to see what's next, what scenario best suits your analysis, right? I'm only trying to help you out here. So yeah, that's pretty much it. As you guys, I mean, unfortunately, I don't know if I was a Jedi today. I don't know if I was a Jedi today. Today is Star Wars International Day, hence the reason why the marketing department decided to, combine the Star Wars event with this NFP. But I hope that you liked the way I view things and the way this webinar was hosted and presented. Should you have any questions or have any feedback, your feedback will be valuable, would help me a lot. Any question market related, you can contact me directly via the Orbex blog or Orbex site. Yeah, so yeah, that's pretty much it for today, guys. No big moves. Yeah, but pretty much I hope that I helped you with some reliable views, and also I hope that you believe that it was helpful with your analysis. Once again, this was Richard, and as I like to say to all my traders, until next time, stay in the green and many pips ahead. Bye for now.